Well, good morning, everyone, and welcome to XPON's Q4 FY22 results webinar. My name is Jane Lowe. I'm the Managing Director of our department, and I'm host for today's session. So joining us this morning are Matt Forman, who's founder and Group MD of XPON. Good morning, Matt.
Good morning, everybody.
And Leanne Wolski, who is XPON's CFO. Good morning, Leanne. Good morning. Good morning. So the format for today is Matt will walk you through the Q4 results, which have just been released to the ASX. So for reference, there are the results themselves and then a presentation that sit with those. Matt will run us through the presentation. It should take around 15 minutes. And then that will be followed by a Q&A session, and Leanne will join us for that as well. You can pop your questions into the Q&A at any point in time to get them into the queue. So just use the Q&A button at the bottom of your screen. And with that, I'd now like to pass the floor across to Matt, who will start screen sharing and get us on the road. Thank you, Matt.
Thank you, Jane. And good morning, everyone, and welcome. Very excited to share our Q4 results, our third quarterly results. It's a publicly listed company. So just quickly, for anyone that may be new to the XPON story, I'll just spend a couple of minutes just very quickly talking about who XPON is and what we do and the problem that we solve. So essentially the problem we solve, the root cause of that problem is actually a privacy problem. And what we do is we help customers manage what's called first-party data to enable them to become more effective and more efficient with their marketing and their customer experience. So we help them make use of data that they might have in their CRM or their point of sale. We help them analyze that data, and then we help them use that data to apply to their marketing and to their websites and their emails and their applications so that they can engage their customers better and become more profitable. We have operations across Australia, the United Kingdom and Europe, and we have an engineering hub in Vietnam, in Hanoi. Essentially, our business is structured with two operating business units. XPON Technologies is our solutions business, so that helps implement our technology. It also is a partner with Google and resells and helps implement some of Google's technology as well. And one of the unique aspects of our business model is we're able to bundle some of our technology with Google's technology and sell a full bundled solution to customers, which our customers are finding really valuable, and you're seeing that come through in our financial performance as well. So the two pieces of core intellectual property that we own sit in our platforms business unit. That's Wondrous, which is a customer data platform. That's a data platform that essentially sits in the middle of a customer's marketing technology stack and allows data, that first party data that I mentioned previously, to be utilized across all the different marketing technology tools and systems. And our other piece of technology is a platform called Holoscribe. It's an extended reality platform. And that enables our customers to publish really rich and immersive experiences in web or mobile or any channel that supports a 360 immersive format. And it really does help drive customer engagement and more effective marketing outcomes for our clients as well. So to the numbers. So first of all, we'll talk through the quarterly numbers from Q4. So we finished the year very pleasingly with quite a strong result. We exited the year with 16.4 million in annualized recurring revenue. That's a 78% year-on-year growth from Q4 and FY21. So very pleasing and very strong growth. Our revenue was 3.7 million. That's up 63% year-on-year for the quarter. Our gross profit at 2.5 million, again, up 85% year-on-year from the Q4 FY21. And you can see there the gross profit margin of 66%. So that's up 8 percentage points year on year. And you can obviously see that in the increase in gross profit itself growing faster than the revenues growing. Our closing cash balance was 8.2 million in the bank. We feel we're very well funded and capitalized to continue the growth momentum that we're on. And that cash helps support that. And our recurring revenue for the quarter was 98%. So it's very, very strong. Previously, we've been operating around the 90 to 92% mark. And I do think that's a reflection of, one, the way that we're selling, and two, the way that we're incentivizing our sales teams as well to ensure that we're very focused on driving recurring revenue. So yeah, very, very pleasing result for the quarter. And then just some numbers for the year. So just to note, these annual numbers are still to be finally audited by the auditors, but we don't expect them to be different once the audit results come through. So the revenue for the year was 13.3 million. So that's up 134% year on year. Our gross profit was 8.6 million, so that's up 162% year on year. Our margin for the year was 64%, 64.6%. And again, that's up 7 percentage points year on year. And that recurring revenue averaged over the year was 92% for the year as well. So again, some really strong growth metrics there. And, we're really pleased with how the team's executing and how we continue to build momentum consistently quarter on quarter. This is a view of our annualized recurring revenue. So you can see the nice consistent steps that we've made each quarter. So for Q4, we added an additional 1.9 million in annualized recurring revenue. And that gave us that June number, as I said, of 16.4 million in ARR. And our unit economics. So, our business model's quite strong. We don't churn a lot of customers. We've got a very high customer retention rate. You can see that in the 99.5% monthly customer retention rate. Not only do we keep our customers and we take good care of them, but when we continue to grow our customers consistently quarter on quarter, our revenue retention rate this quarter was 160%. Previous quarter, I think, was 140%. So it's a 20 percentage point increase. So we've managed to expand a number of customers through the quarter, I think 11 for the quarter. And that, again, just keeps reinforcing that land and expand sales motion that we have and reinforces the value that we continue to unlock for our customers as we continue to grow together and grow alongside them. Our lifetime value per customer is 667K. That's up slightly. It was 654K last quarter. Our customer acquisition costs are up to 43K. That's up from 36K last quarter. We're quite comfortable with that. Our focus on customer acquisition costs is really ensuring that we keep that CAC payback period under 12 months. We still feel we've got some headroom to increase that cost per acquisition if we need to in order to increase volume. You can see that CAC payback period, which is the period that it takes us to earn that 43K back, takes us 8 months to earn. So as long as that number's under 12, we're very comfortable with that CAC number. We've added some new BDMs and we've increased our marketing expenses during the quarter previously gone. So that's what's helped contribute to that increase in customer acquisition costs. And our lifetime value to CAC ratio is at 16. It was 18 last quarter, so it's down slightly. But again, they're still very, very strong numbers. And we're not concerned about any of those movements at this stage. And the total lifetime value of all of our customers is sitting at 136 million, and that's up from 130 million from last quarter. So some of the key operational highlights. Now, we previously announced during the quarter that Wondrous was approved, and we've launched this what's called a customer match upload, or the acronym is CMU, with Google. And what that does is it helps us really extend the reach of our Wondrous platform. It's available through the user interface in Google AdWords. So if you're an advertiser using the Google Ads platform, and there's millions of those Google Ad customers around the world, you're able to discover the Wondrous platform through the Google Ads user interface, and are able then to use Wondrous to take the first-party data that you have about your customers and your organization and synchronize that in a very privacy-compliant and anonymized way into the Google Ads system, and then use that to target your advertising and marketing too. So it's a very strong benefit for our customers. It's a great value add to the relationship that we have with Google, and obviously it's a key distribution pillar as we continue to expand that ecosystem that Wondrous is integrating into as a platform. On the team side of things, very pleasing to see we've been recognised with Great Places to Work. So we're certified in all the 3 regions that we operate now in Australia, the UK, and Vietnam. We had a very strong response rate to the employee satisfaction rates, with 97% of our team loving working at XPON, which is very, very important to us, particularly in a tight talent market like tech, making sure that we've got a really engaged team that we can continue to scale, and they're in an environment where they can do their best work. And then we further expanded our sales and delivery capacity as far as headcount goes. So it was a very busy quarter as far as our people and culture team goes. We grew our global headcount to 135, and that was in line with our talent acquisition strategy. This quarter that we're in now, in Q1, we do anticipate there is still some heavy lifting to go on the recruitment, but we believe this will be that last quarter of really heavy lifting and growth in the headcount. and then it will stabilise from Q2 onwards this year. And we've also appointed a new Global Director of Delivery and Customer Success. His name's Nick, and he'll start at the end of this month. So that's really exciting as well, as that really helps us provide like a standardised solution and a standardised delivery framework for our customers all over the world. And just a bit of a visualization here of the team footprint. So you can see there that our engineering team in Hanoi is sitting at a 45 there. We've got 14 people in London, 19 in Brisbane, excuse me, 14 in Wollongong and 12 in Sydney, and 1 in New Zealand. So we had our first BDM, which I think we announced last quarter, is sort of leading the growth of our business in New Zealand. And we continue to grow our remote workforce in the remote friendly strategy that we have. Just to talk to the land and expand motion, we've had a great year. We've landed 32 customers. These are new customers throughout the year. These are corporate and enterprise customers as well. So typically when we land a customer, we start small. We try and create value very, very quickly for that customer, and then we incrementally grow with that customer over time. And again, you can see that in our revenue retention rate as we continue to expand those customer relationships. And during the year, we've also expanded 34 customers. And so just a note on that as well, that's 26 unique customers that we've expanded, but in total, there's been 34 customer expansions. So some of our customers have expanded multiple times throughout the year and in multiple different areas. So for example, Domino's, whose logo's there, we're now working with Domino's in other regions outside of Australia. So working with Domino's Japan and Domino's in Europe as well. So we're growing solutions with the existing teams inside the customers we work with, but we're also expanding our reach inside those organizations to different teams and different geographic locations as well. So the 5 growth pillars that we've stated in the prospectus, and we're still consistently executing against these. We're continuing to strengthen our existing solutions. A lot of that really is around process and people. We are also keeping an ear to the ground should any acquisitions pop up. There's nothing imminent for us right now. It's certainly not a high priority. We're very focused on maintaining this organic growth momentum that we've got. Continue to expand value creation and product adoption for our existing customers, which is the expand piece of our strategy. Expanding our sales and marketing capacity. So we've done, as I mentioned, a lot of the heavy lifting on the recruitment and the hiring now, and starting to really deploy those use of funds from the IPO. And we'll start to see a lot of that start to flow through in the coming quarters. Expanding our channel relationships, and also expanding that ecosystem that Wondrous sits in. And that Google Ads customer match partnership is a good example of that as well. And then our strategic priorities, we're remaining very, very focused. We're consistently focused on quarter after quarter executing well. So we want to maintain this organic growth momentum. We want to keep focusing on achieving a target cash flow break even for FY24. Our ongoing product development against the roadmap to extend those integrations in the Wondrous ecosystem. Continue to invest in our people and our operations to support the scaling of the business. So that's not just hiring new people, but it's developing and growing our team as well. We've got some really nice programs and frameworks that we've implemented in the last quarter to really help our people become much more productive with what they do and enjoy their work a lot more as well. Continue to focus on that product and customer mix to accelerate our gross margin expansion, which we've demonstrated we are continually doing. Going to continue to focus and develop our sales and marketing capability to accelerate the pipeline and land new customers. Increase that customer revenue retention and continue to execute consistently on the land and expand, and continue to leverage partnerships like the one with Google to keep further validating the Wondrous segments within the Wondrous products. And one of the initiatives that we've kicked off just in a couple of weeks ago at the end of this quarter is starting to do some direct-to-market validation off the back of that Google customer match upload partnership. So essentially what that means is it's unlocking the ability for customers to register and sign up for Wondrous online and start to onboard themselves, which helps potentially shorten the enterprise sales cycle that we currently have for Wondrous. So that's new and it's still to be validated. But these are all the initiatives that we're taking to really try and continue to optimize the business model and really continue to maintain that organic growth momentum. So that's all I have for the presentation, Jane. So if you want to open the floor to questions, we can go from there.
Thank you for that excellent update, Matt. And I thank you in advance for stopping your screen share now so we can see you on screen. A reminder to anybody that would like to ask a question, please do so using the Q&A button in the ribbon at the bottom of your screens there. I'll invite Leanne back onto camera as well, because some of these questions will be for you, and we've got quite a number that have started to come through. So thanks, everyone. So we'll kick off with this one. Great growth and efficiency metrics. Can you share a little more on what headcount growth we should expect in Q1? Is it planned to be widely different to the last 2 quarters? So between, say, 10 to 19?
We'd expect it to be pretty consistent with the quarter we've just had. I think it's in that range of sort of high teens to early 20s, depending on the talent that we can find. And like I mentioned, that would be the last quarter of heavy lifting from a recruitment perspective. We definitely expect to see that stabilise now and from Q2 onwards.
Thank you. Okay, what's the biggest cost associated with cost of sales, and what's different from your solutions relative to your key competitors?
Yeah, so one of the things that and I mentioned this in the presentation, is that we're able to bundle our solutions with Google solutions as well. So that does provide a really key differentiator for us in the market. Also gives us a pricing advantage as well, because we're selling a bundled solution. We're not itemizing pricing for each of the different components as well. So the customers get great value from that. Makes it much simpler for them to not just buy, but much simpler to also implement and execute as well. So that relationship that we have allows us to go much deeper with the customer to really make sure they're getting real value out of the technology. And we get that feedback quite a lot from our customer satisfaction quarterly reviews that we do, is that depth of engagement that we have with the customer really ensures that they are successful. And you see that come back through metrics like our Net Promoter Score, which I think was 88 last quarter as well. So very, very strong there. On the margin side, one of the biggest contributors, because we provide a managed service to our customers as well. So one of the big contributors to the cost of goods is the people component of delivering that managed service to our customers.
Thank you. Okay, this might be one for Leanne. So 2.9 million in cash receipts versus revenue of 3.7 million. Does this suggest a timing gap, and therefore cash burn is 800K, so better than 4C suggests?
I think that is actually correct. We actually had subsequent receipts post 30th of June to about that amount. So I think we have asked this questions, probably read exactly what's happening. That's correct.
Great, thank you. Good question. Okay, Matt, you've talked about headcount, but I'm not sure if you've explicitly sort of stated this. So what number will headcount peak at, and are roles predominantly sales?
So the sales org we have sitting at about 20 out of the like salespeople and sales support people in the business at the moment. We don't anticipate that's going to grow too much more this financial year. Like, we've done a lot of the hiring. I think what's important to realize about the business model is it is an enterprise sales cycle. So, you know, the motion for a rep, a sales BDM, usually it takes them 2 to 3 quarters for them to get on boarded, to build pipeline and start to ramp. So all that investment that we've made, particularly last quarter, which is when we did a lot of the hiring around the sales team, like that hasn't shown up in the financial results yet from a revenue perspective, because they're still onboarding and building pipeline. So look, I don't think we're going to see lots and lots of new hires in that, because we've got a really good solid team now, and there's plenty of capacity in that team as they build their pipeline and ramp. Where we will be hiring is really more around the delivery side of it. So making sure that we can support our customers to be successful with the technology. And like I said, I think we're expecting around that sort of low, high teens, early 20 mark for this quarter. And then we don't anticipate to be adding anything sort of too serious from that. So, you know, we think about 160 potentially is where we think it will sort of top this year.
Got it. Thank you. Okay. Somebody's been looking at the Wondrous website here. So noticed some new logos on the Wondrous website. Can you talk to what ART and Informa are using the Wondrous technology for?
So ART, which was the formerly Sun Super and Q Super before they merged. So they've been a customer for a little while. So they're using it specifically for activation of marketing. So using a lot of the member data that they have to be able to market to those existing members and improve the efficiency of the marketing to those existing members. Specifically, that's through a lot of the digital advertising channels, so Google, Facebook, and the typical ad channels there. And Informa, so they're a recent new onboard to Wondrous, which is good. So we've been running a pilot with them, and then they've moved forward into a full engagement, which is great. So that, and Informa is a group of companies. So to be specific, this is a division of Informa, which is Informa Tech, I think. And they're using it for customer engagement through one of their digital products, which is a streaming technology platform that they have. So video technology streaming subscription service. And again, using a lot of the data that they have on their customers to be able to find new customers, to attract new customers. So customers that look similar to the customers that they already have. And also use it as a cross-sell, upsell ability. So being able to use the data that they have, synchronize that into the ad networks to cross-sell and upsell other subscription services to other content streams.
Excellent, thank you. Question here that relates back to the headcount discussion we just had. So, and it's on ARR, and then we've got a couple more on ARR, which we'll go into. What ARR can a team of 160 support?
That's like someone asking me to provide forecasts.
Yeah, it could be a price sensitive question, that one. Yeah.
Yeah, I can't answer that.
Yeah, okay. Congratulations on the strong result. Can you please discuss the lag between revenue and ARR over the last few quarters? The gap between annualized revenue and ARR has expanded slightly.
Yeah, so it's purely a timing thing. I think what's important to note, and this is in the definitions and the glossary in our announcements as well, is ARR, as we report it, is contracted annualized recurring revenue. So a customer may sign a contract in middle of June, and that will count towards the ARR number at the exit rate at the end of June. But we may have only realised, half a month worth of revenue against that customer during the quarter because they've only signed mid-month in the last month. So it's purely a timing and windowing thing. And there'll always be a lag on that because as the teams continue to ramp up and sell faster, and again, depending in where the ARR lands in the quarter, when the customer signs, depends on how much of it gets realised during the quarter as well.
Okay, thank you. So you talked to maintaining your growth momentum. You delivered 67% LFL growth in FY22. Are you suggesting here you can maintain this percentage growth?
Oh, look, there's always the law of big numbers that kick in eventually, right? But look, we're very confident in the team's ability to execute. We think we've got a really strong, solid business model that's been proven consistently quarter on quarter. So look, we don't anticipate from a momentum perspective, things will slow down at all. I think, are we going to see 60-70% year-on-year growth? Maybe not, because the numbers, law of big numbers start to kick in. But yeah, consistently we anticipate to continue that strong growth.
Great. Okay. Just on to cash burn. So quarterly cash burn and cash position may imply less, implies less than 3/4 of cash remaining. Will you need to raise fresh capital?
Do you want to answer that, Leanne?
No, I'll answer that. No, we do not anticipate that we need to raise additional capital per the presentation and what Matt said earlier. We expect organically we should be able to achieve, and we are targeting to achieve cash flow break-even in FY24.
Thanks, Leanne. Okay, what's the revenue split between technology that you own and technology that you're reselling, or what products that you're reselling?
Yeah, we don't segment out the revenue like that at this stage for competitive reasons. You'll see in our report and our audited half-year and full-year report, so we do split the revenue out by licenses, managed services, usage fees, and one-off project fees. So that's the kind of segmentation that we're providing to the market at this stage. And I believe the licensing fees are around 30% from memory, I think.
Great. Looking at the use of funds versus the prospectus in the quarterly, your sales and marketing and product development is significantly below year one projections. Can you talk to that?
Yeah, I think it's important to also note that we listed in December, so that use of funds was for the calendar year, for the 2022 calendar year. So we're actually 6 months into it, not 12 months into it. So, you know, we're comfortable with the way we've been deploying the money. We're also really comfortable that we've been managed to consistently maintain this growth momentum without having to spend as much money as you know, we could have as part of that. You know, it is tough to find good BDMs, and in that sales and marketing section, a lot of that was for salaries and things like that. So there was a lag in when we could find the right BDMs and get them onboarded. That then has a knock-on effect to when we start spending money on marketing, because we're not going to spend money on marketing, building leads and pipeline for BDMs that we haven't onboarded yet. And we've still managed to hit some very strong growth numbers, even though there was a slight delay in that. So yeah, we're quite comfortable with how those funds are getting deployed. And we're comfortable with the way that the business has been able to grow with that as well.
Okay, great. And so just around employees and growth. So have you used any novel ways to incentivize your existing employees and to attract new employees?
Novel as in googly novel? I don't know. Look, I think we're very focused on our people. Like, it's something I'm really passionate about as well, our people and our culture and our values. I think what we do very well with our people is we're very authentic, and we're very transparent, as transparent as we can be with our team. And we are focused on making sure we meet our people where they are in their career, and then we work together collaboratively, like we do with our customers, to help them grow together with the company. So, you know, our people are really engaged. They've got a very clear, you know, path for them to continue to grow with XPON for as long as that journey may take them. And everything we do is rooted in our 5 core values. And I think that authenticity and transparency resonates with a lot of people, because we are very values driven, and we're not just about transactions and selling and things like that. We genuinely have a soul to the company as well, and there's a certain type of people that attracts. You know, we're remote friendly, that helps as well. We're certainly not mandating that people have to work from an office or anything like that. Collaboration is great. And in fact, what we find just by giving people choice is people still want to come into the office and catch up with their teammates because they enjoy it, and they can connect and collaborate and be creative together. And I think giving people that choice resonates with a lot of people as well. So I don't know if that's novel, but that's just our approach.
That's good. I know that you're in the office today as well, so nice to nice to see you with the team. Okay, so we're coming up pretty close to time, so I might just take put to you a couple of final questions, and then I'll hand over to you shortly for final comments, Matt. So you mentioned acquisitions and SaaS integrations in the past. Any update on these?
Yeah, well, there's no acquisitions that are imminent right now. Obviously, we're very focused on executing the organic strategy. Always have an ear to the ground, though, around that, because, you know, in the current market, there may be some very good opportunities that present themselves. We haven't found one yet, but, you know, we're open to that. We're open to dating, I guess. And on the integration side of the roadmap, we're continuing to integrate. You know, we've just started validating and piloting integrations with Shopify, which is one of the #1 e-com platforms in the world. Similarly, there's a HubSpot integration that the team are validating at the moment as well. So there's lots of integrations that we're doing there to continue to build out that ecosystem that Wondrous can be a platform to power with data through. So yeah, we're continuing to execute against that.
Terrific. Okay, so one here on R&D spend. At 9% of revenue, your R&D spend appears a little light. Is this sustainable to stay ahead of competitors, or do you anticipate it climbing over time?
Yeah, I think what's important to realise when you analyse it like that, that not all of our revenue is from our own IP, because we do bundle and resell other IP. So yeah, we're very comfortable with that level. We think that's sustainable. We feel we've got quite a competitive product in the marketplace at the moment. We're going to be customer led on how we continue to roll out the roadmap and iterate the product. And, you know, if that needs to change in the future, we'll review it then. But for now, we're quite comfortable.
Excellent. Okay, well, we might make that one our last question, as I know you've got other investor updates through the day today. Thank you to everyone that made the time to join. If you did have a question that we weren't able to get through in the time that we had, feel free to reach out to Investor Relations. And with that, Matt, I might hand over to you for any concluding comments.
No, thank you, Jane, and thank you everyone for your time and your interest in XPON. And yeah, we're very excited about FY23. I think we're coming into this year with a huge amount of momentum and a really highly motivated team that's demonstrated they can execute. So as I say, I'm Big Kev, I'm excited.
What a way to end. Excellent. With that, we'll invite everybody to disconnect. Thanks all. Have a great day.